With the AI tooling today, you can mock up a view of what your product will look like in a couple of hours very easily. And then you get real world feedback. It's not hypotheticals around, do you think you would use this product if it were to exist? Let me walk you through a demo and see if you think that's interesting. And when people start biting your hand off and saying, can I start using this tomorrow? Then, and you have to go and scramble to actually build it. That's when you've got a good sign on your hands.
Welcome to my interview series with leading UK and European investors. Through this series, I speak with leading venture capitalists across Europe and global markets to understand how venture capital is evolving and where the next generation of transformative companies will come from. And we will uncover the thesis of the leading investors. Today, I am delighted to be joined by Will Orde, partner at Passion Capital, one of the Europe's leading pre-seed venture firms, known for backing exceptional founders at the very start of their journey. Passion Capital has built a strong reputation for identifying and supporting category-defining companies early, particularly across fintech, SaaS, and more recently, AI-driven startups. The fund is known for its hands-on approach and high conviction investing at the early stages. Will brings over a decade of venture investing experience, having previously invested in firms like Oxford Capital, Downing Ventures, and Conviction. Today, at Passion Capital, he focuses on backing outstanding European founders building in the areas such as AI, fintech, and risk, with a strong emphasis on product, execution, and long-term thinking. Will, great to have you with us today.
Great to be here. Thanks for having me along.
Let's get started. Wanted to understand a bit more on the pre-seed conviction and decision-making, right? Passion Capital is known for investing at pre-seed, often before there is meaningful traction. How do you build conviction at a stage where there is very little data to rely on?
Yeah, no, great question. And when we do pre-seed, we do proper pre-seed. So we've done 11 investments out of the latest fund. None of them had any revenue at the point at which we invested. Most of them it was pre-product. At the point at which we invested, actually, the last but one investment we made, the founder had to incorporate the business so you could open a bank account to take money from us. So there is no such thing as too early, and you will never catch me saying to a founder, I'm sorry, it's a bit early for us. Can we just see a bit more proof points, a bit more traction or anything like that? So when you're investing in that mindset, there's only really two things that we can look at. One is really understanding the vision around the pain point. Is this a proper kind of hair on fire pain point that customers are going to want to kind of, when there's a solution there, grab hold of it and pull it with two hands towards them? And the other is the founder. And the founding team is really what we're basing the bet on. And that's with an understanding that product changes, market competition changes, kind of pain points can change. We want to back teams that are going to go the distance and have the kind of grit, determination to build something big and emerge as the category leaders in their space at the far end of the journey.
At pre-seed, what matters more to you today? Founder insight, speed of execution, or early product signals?
Yeah, I think it's great to see founders who've just got a real get stuff done attitude, and they're not afraid to get on a call with prospective customers to get early feedback into what a product's going to look like. But there's no substitute for momentum. And when we see founders who are moving fast and talking to customers, developing products, testing out kind of demos and wireframes, with the AI tooling today, you can mock up a view of what your product will look like in a couple of hours very easily. And then you get real world feedback. It's not hypotheticals around, do you think you would use this product if it were to exist? Let me walk you through a demo and see if you think that's interesting. When people start biting your hand off and saying, can I start using this tomorrow? Then, and you have to go and scramble to actually build it. That's when you've got a good sign on your hands.
Right. Talking about the founder quality and pattern recognition, you've backed founders across multiple funds over the years. What has changed in how you identify exceptional founders today versus 5 to 10 years ago?
Yeah, so we've probably got a bit of bias towards founders who've got from what's changed, prior experience of good, and that's partly just the European ecosystem growing up now. And there are so many more founders who, not necessarily being second-time founders, though that's fantastic, but you might have been a lieutenant or the right-hand person going on the journey from Series A to Series D, and you've seen what it means to ship good product at high velocity, what it means to truly get customers bought in and to retain great customers once you've sold them. How can you build great culture and hire fantastically? And you may have experienced this kind of second or third hand, but you've got a sense of when things are working or not. And most importantly, I think you've seen successful founders before, and then you've got that real hunger inside to go and do that for yourself. So there's a chunk there of just ecosystem maturity. The other piece, and I think one of the real have and have not divides at the moment, is AI native founders versus people who are still stuck using tools from 2-3 years ago. Those founders are really leaning into the most that AI can do for them. They're able to move a lot faster and get more done quicker.
Right. These are really interesting signals for the newer investors. Moving on, as there are specific traits you have identified, like, are there any traits you now actively avoid, even if the opportunity looks strong on the paper?
Yeah, and it's the weird thing about investing so early is it ultimately comes down to kind of gut feel on, is this a team that we want to back? And this isn't just my view, it's a partnership, and kind of we each have a slightly different view on characters and who we get excited about the vision for. And we want people who are kind of charismatic visionaries, who are gritty, who are determined. The bits where we get a bit hesitant, people who are too stuck with, I know what the perfect answer is, and aren't willing to take on board feedback. That gets us worried that there won't be the flexibility, the agility to adapt when things aren't quite going right. And one of the outputs of this can be founders who think they can build the perfect product, and they put a lot of effort into building a product before they ever go and try and sell it. Because if you spend a year building a product with no customer input, you might build something that's great machine for slicing bread, and everyone just wants whole loaves of bread, and you haven't been able to listen to the market. They're also kind of, we definitely want founders who are willing to, we want to build a relationship of trust with the founders that we back. Stuff will go wrong on the journeys, inevitably. There will be bad moments. You'll have dreadful weeks where you're questioning why you're being a founder. We would prefer to back founders who will tell us that things are going wrong, even if they haven't found the solution yet. And so having kind of that trust and transparency in the relationship means that we have a chance to be helpful and to be supportive. If you think that when something goes wrong, you've got to fix it before you can tell your investors, you're closing off any opportunity for your investors to say, oh, actually, I know someone who could be really helpful and help you fix that. Or we had another portfolio company go through this issue 6 months ago. Here's how they got out of that hole. So transparency, not kind of a belief that they have to be right all the time.
Right. It does feel like the bar for founders has evolved alongside the ecosystem. Passion has a reputation for backing strong product-led founders early. What does great product instinct actually look like in a first meeting?
Yeah, I think kind of people always talk about the grandma test, and to me, it's not necessarily the grandma test of, so could you describe this product to your grandma and she would really get it? That's great for the consumer kind of mindset. At the moment, most of the companies we're selling are enterprise products, so I talk about kind of the grouchy old CFO in the business that you're selling to. You've sold into your product champion, the end users who are going to use it. They're deep in the space that you live and breathe. They get it. They want to use it, but they have to be able to articulate an ROI internally. And in a world where people are still conscious of cost base and they don't want to be making big new commits on new bits of software or new tooling, how do you sell that through? And so someone who can describe why will early users adopt this? Why will they love it? Why is it going to make their life easier on a day-to-day basis? They're the technical bit, but also why is the management team going to sign off on this new product and think this has to go to the top of the priority list for us to spend more money on? That dual vision of insight, I think, is kind of relatively rare, super early, and speaks to someone who's really thought about the whole view of the pain point they're going after.
Interesting. Now, let's talk about your core interests in AI, fintech, and risk. This is where you're spending a lot of time. You focus on all these areas, AI, fintech, and risk. Across these areas, where are you seeing the most real, durable opportunities versus the short-term hype?
Yeah, great question. So the reason that we focus on those areas is really simple. We look back at the 100+ startups that we've backed historically and thought about where had we done the best job, and the answer was kind of fintech and enterprise risk. And so, well, let's do more in those spaces, because and this is a twofold thing. We have a better track record of being able to pick good founders, and the best founders will want to work with us because we can bring more relevant experience to bear, and we've got stronger network in those spaces. And it's really a two-way matching function for founders and VCs. We want to back great founders, but we also want to back the founders who are being ambitious about which investors they want on the cap table and where we can compete and offer the most value to them. Within those spaces, we're definitely looking at kind of vertical applications of AI much more than new foundational model approaches. I get really excited when somebody comes in and describes a pain point and they're talking about words like email, Excel, and PDF. These are not generally areas that SaaS do a fantastic job of solving, and you're competing against a 5-year-old SaaS company that's also adopting AI into its stack. You're looking at kind of areas within payment rails or fraud or accounting, month-end close, stuff that's still highly manual, dependent on contextual knowledge, and frankly, pretty high risk for the businesses that you're selling into. And then to us, kind of fintech and risk can be two sides of the same coin. It's how are you moving money, or what's your risk of losing money in future?
Right. Interesting. Now, there's a lot of capital flowing into AI today. At pre-seed, how do you separate companies building real value from those riding the wave?
Yeah, I mean, kind of get your tin opener and look under the hood for most of these companies, and there's a ChatGPT or Claude or some other foundational model in there that's doing most of the heavy lifting. But we know, on the other hand, that I can't just turn around to kind of Bob or Sarah in pre-sales and say, here's a ChatGPT API, have at, automate your process, reach out to customers more efficiently. They wouldn't have a clue where to start. So I'm a big believer in the power of strong product opinions. And one of the kind of analogies that I use often with kind of founders that I'm talking to at the moment that gets people scratching their heads and thinking is, you go into a lot of these companies and they say, oh, it's very custom, we've got a unique solution to us, and that's rubbish. Most companies operate under the same constraints, and they've got a unique solution because it's been designed by humans, and the wheel has been reinvented at 20,000 different companies over the globe because it hasn't been solved by SaaS before and you're doing manual processes. The same thing used to exist in sales before the arrival of Salesforce. And then when tech arrived, everyone then consolidated around a more common best practice, and the industry went that way. So there's going to be opportunities for strong product view to be able to listen to customers of what they do that's unique with them, but also tell them that bit there, stupid. Do it this way instead, and we're going to make your life a lot easier, but doing that without making the customer feel like they were stupid for doing it before. So yeah, I think there's definitely opportunities there to bring the differentiated magic that sits on top of the foundational models, and to think about where the vertically specific data is that means that you're more adapted to the use case and you're solving the problems that LLMs can't solve well, that takes this from being a good solution to a great solution.
Mm-hmm. I think the distinction between durable opportunities and hype is especially relevant in today's market. I mean, so on fintech specifically, you recently highlighted London as a leading hub globally. What continues to make London such a strong environment for building fintech at scale?
I mean, London's been an attractive place to build fintech companies forever. And it's got the city, it's got Lloyd's, like there are big old-fashioned buckets of finance talent in payments, in banking, in insurance, in all of the kind of big spaces. But actually, more importantly than that, London was a great place to build fintech companies in the 2010s. And you had kind of Monzo, Go Cardless, Revolut, Lendable, Tide, like this whole wave of great companies coming through. And lots of people went there and went to school. And some people who leave a business like Monzo and go on to found another company, they go off and found a DevOps company because actually it's about building good infrastructure at scale. But a lot of them go, I know about money and I know about the fintech system. I'm not afraid of regulation. And so then they'll go back in and build again. So I think kind of there's some recent stats out that London's been the top fintech fundraising hub, beating out both San Fran and New York over the past couple of years. It's a really positive sign for European tech that if we lean into the areas that we're good at, we can go toe to toe with the US for building great businesses that are kind of going to be the global winners in their areas.
Great. It's interesting how certain ecosystems continue to compound over time. Now let's talk about the risk category, the differentiated angle. You explicitly mentioned risk is an area of focus, which is less commonly defined in venture. How do you think about risk as an investable category?
Yeah, so it's one of these things. If you go into a big corporate business and you look at what they discuss at board level, they've got a massive risk register. They've got a whole load of topics that they spend a lot of time on. They care about where am I at risk of my business going wrong, of being fined by the regulators, of shifting waters underneath us, kind of exposing the business. They're very willing to spend money there. And a lot of this has been picked up in terms of that spend historically by consulting firms and by hiring knowledgeable individuals within the businesses. So if you think about areas around like compliance, around reg tech, around legal tech, around cybersecurity, around fraud, around how do I close out my books at the end of the month and make sure I get it right first time round, which means I don't have to spend as much money with the auditors in the audit cycle. These are all risk-based topics more than a sell where you're going, hey, I'm going to increase your revenue if you buy my software. So I think it's a very natural companion to fintech. It's one that's been underserved historically because frankly, pre-AI, is very hard to build good quality products in those spaces. And so we're interested in founders who are tackling building products with risk as their kind of mindset in mind, but delivering great outcomes and often delivering really strong ROI of bringing better quality knowledge into businesses and saving costs and how it takes to execute against these issues.
Now that's a really unique way to frame it. Moving on to the European ecosystem and global positioning, like from your vantage point, how is the European startup ecosystem evolving at the earliest stages compared to the US?
Yeah, I mean, there are founders with great ambition all over Europe. And I say kind of all over Europe very deliberately because I think kind of 5-6 years ago, if you were a founder anywhere in Europe and you wanted to found, you felt like you needed to move to one of the main hubs, kind of London, Paris, Berlin, to get the density of capital there. We're seeing great companies kind of come out of Eastern Europe that would have 5 years ago, the founders would have moved to London or moved straight to San Francisco, and now they're confident to start building in their hometown. And this is all kind of we're sitting on a video call now having this discussion, but you can be much more mobile with the ability to deploy capital and be supportive of people. I think that's kind of going to drive a real new wave of innovation. And compared to the US, very concentrated innovation economy with the major hubs in the Valley and in New York and in Boston being responsible for most of the returns there. You've seen already unicorns pop up from all over the map in Europe. I think that's just going to continue. And we're seeing kind of real ambition from founders who've got great technical skills, have learned from previous generations of good companies, seeing what good looks like. And it's not, I'm going to settle for a 10 million or 100 million exit. No, I'm out here to build a durable business that's not going to stop at a unicorn, but going to keep on powering well past that. That's the level of ambition that we get excited to see within European founders.
Right. It does feel like some of the biggest opportunities sit in areas that are less visible or even harder to understand. Now, do you think European founders are becoming more ambitious in building global companies from day one? It's just a follow-up question on that.
I mean, it's amazing what you can do, and sometimes some of our founders get shocked. I mean, they build something, one company where they've got an open source platform, and they get inbound interest from all over the world where people have started using the product and gone, "Hey, I need this," and that pull can be generated as soon as you're able to demonstrate that you've got a winning product in the category, and you've built great product, you've put a really strong narrative around it, got the case studies from early adopters, and it's really hitting one of those hair on fire pain points. That can build crazy momentum, and you need to not be afraid to lean into where that momentum is coming from and come and grasp it. And a lot of the time it's going to be the well tried and tested, let's expand to the US and go and take the US market, which may be competitive, but there's lots more funding available there. But actually digitization is going on worldwide at the moment. Southeast Asia, Middle East, like you can get pull from all over the place, especially within fintech, where Europe is kind of well regarded both from a reg setup and from a kind of just general credibility point of view to come and provide these solutions into other markets.
Right. Now talk about your portfolio and a little bit of a founder advice. Passion is known for being hands-on early. What does meaningful support look like in the first 6 to 12 months after you invest?
Yeah, I mean, I am available at all hours for my founders. It's on WhatsApp. It's the little questions in between. I say to all our founders kind of when we're investing, look, if I don't talk to you, I can't be helpful. I don't want just like an end of month email that has a bland ask at the bottom. We want to be inside your thinking and then be able to give advice and be able to interject bits of network, bits of introductions at the right time so they're meaningful, rather than just bombarding you with news. Hey, have you seen this article? Or did you see your competitor raise? Of course the founders have seen that. They're all over their market. It's trying to kind of help steer the strategic thinking, often pulling founders up out of the cold trench, the cold face where they're fighting for what am I going to do tomorrow, what am I going to do tomorrow, and thinking where do I need to be in 6 months' time? How do I deliver that narrative? And personally, like one of the most valuable things I think investors can do, and one of the hardest things for investors to do, is sometimes keep quiet and just let founders get on with it and protect them, rather than just bombarding them with intros that they feel duty bound to take because it's coming from my investor and they give me money, I better take this intro. Yeah, sometimes a little bit of peace and quiet will let them get on and execute without distraction, and judging when I should try and be helpful and when I should just zip it is tricky.
Right. Now, before we wrap up, I'd love to zoom out and get your perspective on where all of this is heading. If a founder were pitching you tomorrow at pre-seed, what is the one thing they should get right that most early founders still get wrong?
Yeah, I think there's two things that get me most excited. It's momentum, and look, it's pre-product, pre-revenue, but just go and do stuff. Like, you don't need to wait and ask permission. Go and start talking to customers, start talking to potential partners, start learning and validating your story. And then just like a really clear demonstration that this is a proper like hair on fire problem for your target customers, where it's going to be meaningful. And you want that kind of frame of mind that your customers are going to look back at the end of the year and go, what are the 2 or 3 things we did this year that were transformative for our business? You should be one of those things. Not I forgot we even added this bit of tech into our stack this year. It's been pretty meaningless. You need to be going for big impact and really transforming the lives of your customers.
Great. Thank you so much. Well, these are really helpful for our founder audience. Well, this has been a really insightful conversation. I think what stands out is early stage investing is still very much an art, especially at pre-seed, where conviction comes from understanding people, product instinct, and signals that aren't always obvious. Hats off, I think you've been great. It was also great to hear your perspective on where real opportunities are emerging across AI, fintech, and risk, and how the European ecosystem continues to evolve with more globally ambitious founders. Thank you again for taking the time to share your thoughts and for joining us today. And to everyone watching, thank you for tuning in. We will be back with more conversations with leading investors across Europe and beyond. Thank you.